Hey, it's Tuesday. I didn't manage to cover the yen pairs in my webinar over the weekend, so I'm going to do that now for you. Yen obviously has been quite interesting. The yen has collapsed against pretty much every currency, especially the US dollar, which we see here. The yen has actually been heading lower against the dollar. Let's talk about it in terms of the dollar. The dollar has been heading higher against the yen. That's much easier to understand seeing as we're looking at it in terms of the dollar since the beginning of 2021. So the US dollar has risen from about 102.5 up to 136.70. So that, in my books, is a 3,400 pip rally in a year and a half. Pretty good. Pretty good if you were long. So what happens next? Seeing some signs of weakness, but no sell signal. So I've suggested in my reports, at least, if you're a subscriber, that we could start to trade sideways. Now, I thought we were doing that here, to be honest. So then I was a bit surprised by this break up on the 21st of June. So what was that? That was a week ago, exactly a week ago. I believe it's the 28th today. So exactly 1 week ago, yeah, we broke up on Tuesday, and I thought, oh, okay, I'm wrong. We're not trading sideways. We're gonna start another leg higher. But then the next 2 days, of course, we wiped out those gains. So that was the confusing bit. And I'm pretty sure now we are overbought. We've had a good run. We haven't hit any long-term resistance, so I don't think we're going to turn around and collapse. But it's perfectly normal in bull markets for whether it's stock markets, commodities, or forex, for prices to trade sideways for a while, to consolidate. And I think that's exactly what we're going to get now. So we'll see. But certainly it seems to be the case. We had some long lower wicks on the candles, on yesterday's candles. So it does show that when we do dip, buyers are coming in, and we did close up on the day slightly. But I do think that more sideways action. Anyway, the levels are on the sheet if you're a subscriber, and if you're not, well, I wouldn't worry too much because we're probably just going to trade sideways. And really, we've got to wait a few more days until we can see if this is a bear flag or a triangle, or maybe even we'll get a double top if we retest the high and it doesn't work. So right now, there isn't a lot that I can suggest that you do with this pair until I figure out what pattern we're going to make. Done a nice job there of talking you out of paying for a yen subscription, didn't I? Unintentionally. Right, euro yen. Now this looks like a double top. We've got quite negative candles at each peak, which sort of helps reinforce the message that it could be. On the weekly chart, I'm not going to show you, but basically we've got long upper wicks on those two candles on the weekly chart, indicating neutrality really more than negativity. And of course, after this big red candle, we have started to recover. So we're more than halfway to retesting 144.23, which was the double top high. And then it's just a question of, does that hold again? And do we tumble? Or do we break above it? And do we start a new leg higher? But of course, that didn't work last week in the dollar yen. We broke higher and then it tumbled immediately. So, this is just indicating to me that the yen is stabilizing at least. And maybe the downside, well, maybe there is no more downside to the yen. And therefore the euro and the dollar won't appreciate. But again, I need to see something more solid as far as in terms of a pattern are concerned before I can really get an idea of where the next direction will be. Now, even in New Zealand dollar yen, which has got a fairly clear cut, well, I could still argue that this is a double top. And once we broke below the 23.6% fib at 84.47, I thought, oh, here we go. We've broken the trend line, we've broken the 50-day moving average, we've broken the fib. Looks like we're going to sink. Well, I thought we'd sink to 82.70. We didn't get far off, to be fair. We got to 82.94, but I was all ready to jump into a long position around sort of 82.80, 82.60, and that never happened. We recovered remarkably quickly, straight back up through there, sooner than I thought. So I don't really know what's going on here. I guess I could put a trend line on here. Yeah, and so that would be a real nice resistance level if we got as far as 86.50 in the New Zealand dollar versus the Japanese yen. This level is holding now, and I've had that on my cheat sheet. I've had that on the reports, 84.50, 84.40, a good support level. So that's worked. But again, kind of drifting now, and maybe we'll just drift between 84.50 and 86.50. We could just hold that 200 pip range. In fact, that's probably the strategy that I would take right now. See if shorting at resistance up there, 86.50, and buying that support down at 84.40. See if that works while we figure out what pattern is gonna form, and then we can take it from there. Aussie yen, I can argue, is already establishing quite a nice sideways trend. Let me put some trend lines on here. There we go. So triangles, but the support level down at 82.70, 82.50 really did work last week. That was nice. So if you traded that, well done. The simple, just the trend line, the moving average, sorry, not the moving, yeah, the moving average, the 50, that's the black line, and the 23.6% fib, that was where my support was, and it's worked. Not dramatically, but there was a decent enough profit on the trade, 100 pips or so. No one's going to complain about 100 pips when you're only risking 30, 3-to-1 risk-reward ratio. You know, that's the kind of thing I like to look for. What else can we talk about in terms of the yen? We can talk about the pound versus the yen, which is not that dissimilar to the New Zealand dollar chart against the Japanese yen, I guess. You know, look, we've got narrowing trend lines, I suppose. Right now, what would I do with that? Not a lot, really. We're just glancing at the weekly chart. I can't really see a lot. Clearly, we've got resistance up here where this upper trend line is, but right now, I don't really have much else to say. I wouldn't even bother trading that to be fair, but at least we had a look at it. CAD yen. So let me show you how I'll put my trend lines on here. Fairly obvious, really. You would do the same, I'm sure. We'll put one on there. So that's clearly a rising channel, but I think we can argue that we should put a little trend line there too. So what have we got there? If we can break above this trend line, let me also put some fibs on there. I actually really need to go back to 2021 with my fibs. So I'm going to show you how I'm going to do that now on my weekly chart. Here we go. Weekly chart, there we go. Right, so I need to go back to 2021 because that is the, actually 2020 is actually the low. Let me just show you what I'm going to do there. Right, so the swing low for me is 2020, as you can see from this chart. And then I'm going to take my fibs from that swing low up to that swing high. And I'm going to see where else I can put a secondary set of fibs, which I like to do. Now for me, I think that this big push higher started at the end of December last year, and I kind of like that because time-wise it's a nice divide as well, isn't it? I'm just kind of encompassing what's happened this year in 2022 by taking the low of the last week in December, and it's just above the 61.8% fib, so I kind of like that. What have we got? 102.50 as a bit of a support level. We overran that last time. I'm going to leave those fibs on there. Are they convincing enough? Probably not, but I'll just leave them on for future reference. Yeah, they're not actually the most convincing set of fibs I've ever seen, so I'll leave them for now. But there you go. We've got support down here at 103.20, and if we can get above 105.30, looks like we can push higher for the Canadian dollar versus Japanese yen. I suppose that's more of a pattern than we've got in some of the yen pairs, but it's doesn't really tell me an awful lot right now. So we'll see what develops, whether this sideways pattern develops even further. It's only kind of 2.5 weeks old. It's not that old yet, but I wouldn't be surprised to see further sideways action through the summer. Okay, the other thing I should probably have a quick look at, not the dollar yen, not the dollar index, which I've just clicked. Actually, as I've clicked it, let's have a look at it. Look, we're still trading sideways. Support for the dollar index down at 103.5. Worked last time. I think it'll work again, especially as we've now got the 50-day moving average and this trend line going back to March of this year, both moving upwards towards that 103.50 support. So if we were to test that towards the end of the week, should be a really good support level for the dollar index. Of course, if we close below sort of 103.20, 103.15 on the week, that would be negative. But we can look at that again in the weekly webinar. In the weekend webinar. Next weekend, what else did I want to look at? 10-year. I didn't have a look at this in my webinar, and I did talk about it the week before. So I talked about how the bonds had probably, or the bond yields had probably topped, and that they would turn lower, and that is indeed what's happening. Now this should make for a nice, interesting set of fibs actually. If I look at this on the monthly chart, there we go. Actually, I can get away with a weekly chart on that. So let me have a look. Where do I want to go with that? So here we go. Okay. Whoops, doing that all wrong. There's my fibs. I'm going to take them from this low, which is at 1/3%. Wow, that's how low rates got. I'm actually going to take my second set of fibs from here, from this low in January, and see how that works. Yeah. Okay. Well, I'll leave them on there and see how that does work. But we are getting support around the 3.04, 3.03 area. We got that was around the low. Oh, we got as low as 3% on the 10-year T-note bond yield last week. But we are recovering off that, so that's quite interesting. So maybe this is in for a period of sideways trading from sort of 3 up to 3.5% over the summer while we wait for some new economic news. That trend line looks like it could work quite well as well. Yep, that one looks pretty good, doesn't it? So that works on the downside, and I'm guessing I need to put the trend line somewhere like here, do I? I'll leave it on there. It's not particularly relevant at the moment. The really relevant one would be this one. Okay. Right, I'll leave it at that. Hope that helps. Yen, as I say, probably sideways against most pairs now, and we'll wait for those patterns to develop, and I'll look at them again over the weekend. Please do join me for my weekend webinar then, and have a good day.